So let's get into how this looks. So the first most important thing to do when it actually comes to fundamentals is follow these pages on Twitter, because they are constantly updating you with financial updates. You're going to have alerts sent straight to your phone just by following these pages on Twitter. And the second one, as you guys probably know about right now but don't know how to use, is forexfactory.com. So the first piece of any time I go to step out the trade is I go to forexfactory.com and I look at all of the high impact news releases for the entire week. So let's bring this back to last week, right? I'm going to simply go from the 22nd to the 28th, and you guys can see here, these are all the high impact news releases for the week. Now I start to formulate a bias on what's going on, and I start to read what are the actual important news events coming up. So on Monday, I saw that there were a ton of Euro and GBP news releases coming out, and you also have the US dollar news releases. And if you start to look at the forecast in the previous, you can start to make some sort of bias, right? So here I can see that French services are expected to come out at 53.0 and previous was 55.0, and then the actual is 48.3. So obviously when I'm looking at the charts, I don't have the actual, but if I'm able to look at the forecast, then I know why the charts are moving the way they are. And then if I'm able to look at the previous, then I can understand if this is going to be a realistic move or if we're going to see a miss. So for example, let's say I'm looking at EURUSD. They're anticipating that the Euro economy is going to grow and that the Euro will appreciate in value. Yeah, I'm seeing that the Euro is going towards a supply zone. I'm going to already be thinking, let me wait to see what happens with the news release, because if we miss this release, then you guys will see the supply zone play out for sells. If this release hits, then I know that I can target my supply zone for my buys. So let me show you guys how that actually looks on the charts. So what I've done here is I've marked out those two news releases that you guys can see right here are between 10:15 a.m. and 4:45 p.m. So I've literally just marked out those two time zones on my chart. Now I want to show you guys exactly how I use the fundamental analysis to confirm the breaks of my liquidity and also my order block. So as you guys can see, we have our first releases come out and nothing crazy on the charts is happening. We're continuing this uptrend. And then you even see when the dollar news comes out, it comes down and then it continues to consolidate. Now the first area to me that the markets released their news at was this candle over here. And guess what? It prints for a perfect order block candle. It's this candle that brings us towards the upside. It doesn't have a gigantic push behind it, but at the same time, it has a news release backtracking it. Meaning that if this wants to break, then there has to be some sort of news release to play against this level. And so I'm going to extend this area to the right. And another thing I'm going to do is start to find my liquidity levels on the charts. So I can easily see that I had a liquidity level resting right there, and I had another one resting right here. And I can see both of these got swept, right? And then I can see price sweeps Asia lows, sweeps Asia highs, and builds more liquidity at this area. And if price is going to sell off from here, it's going to use this level over here, right? So now I have two scenarios here. I have buy limits set at this order block resting down here, which you guys can see is going to leave me with a 3.2 pip stop loss. And then before I can really set my take profit level, I want to see where price really drops from when it taps us in. So I can see price over here kind of breaks structure towards the downside with that break over there, pulls back up and then drops us in. So now understanding that I've swept Asia lows, I've cleared Asia highs, and now I've broken structure towards the downside with an order block that wants to be tapped into, I could have even taken sells off of this level right here. And then my target for my sells would be where? It would be at this resting order block down here for a simple 1 to 2.8 risk to reward ratio. And at the same time, when you get tapped out of those sells, you're actually going to get triggered into your buys. And once you're triggered into your buys, you're going to look for the rejection order block, the order block resting on the other side that would potentially bring you back down. So the same way that we saw buys be this take profit level for here, we're going to see sells be the take profit level for here. And I'm going to set my take profit just to this level right here. And then if I look to the right, you guys can see price perfectly hits it and then rejects and would have even stopped you out if you didn't get out at that level. And that is the beauty of the strategy. Just like that, I've been able to catch a 1 to 8.25 risk to reward ratio trade. And I've also been able to catch a 1 to 2.8 risk to reward ratio trade. Overall, catching 11 risk to reward ratio across 2 trades on very minimal effort. So let me get into another example so you guys can really see this. So here you guys can see that we had CPI for the Australian dollar release on Wednesday at 4:30 a.m. So I went ahead and I looked at the previous data, which was 3.5%, and the forecast, which was 2.7%. Now this is a big jump. And when I hopped on my charts, you guys can see this is where the news released. And in my head, I'm already thinking, if inflation is going to be going down, this is going to be better for the Australian currency, and you guys will see the Australian currency get lower in price because everything right now is inflated. So if there is a level of deflation that occurs in the economy, then you will see your currency start to deflate, which is actually better, right? So here I can see that price had really heavily started to trend upwards. So what I can do right off the bat is draw a dynamic liquidity towards the upside. And you guys can see, you know, it holds, it pushes away, holds, pushes away, holds, pushes away, and then it kind of like trickles its way out. And if I had seen a big push towards the upside, right, something that would have looked like this and then a break, then sure, I'm happy with that. But when price really breaks structure simply because it is moving to the side, I don't necessarily like to get in on moves like that. So I wanted to stay patient, especially knowing that the news release was going to come up soon. So here you guys can see the news release is here. And you can already start to see that the market has started to shift towards the other side. So in this scenario, I'm going to show you how I actually use dynamic liquidity to be respected with our news releases to continue on downwards. So now I have the data, right? Everything past here, I have the data for that news release because it's already been out. So I can see that it did come out at 2.7%, which I'm thinking this is great for their economy. You know, they just lost 0.8% of their inflation. So now what I did was I drew a dynamic liquidity towards the downside because I wanted to get in on this move. And as you guys can see right here, if you just simply draw this out, you're going to see price comes in, touches, comes down, touches, barely misses, pushes down, touches, and comes down. Now I always like to get in on the third touch or more. So in this scenario, I can see on my minute 15, right, I can see price comes up, fails to break. Price rejects here, fails to break. And then price completely engulfs after that doji. And right there, you should be hopping into this trade. Then you can tuck your stop loss over that previous high you just made, because if you really are moving bearish, there should be no reason why this gets broken. Now, at the same time, I'm going to be looking for a rejection order block for my target level to be getting out of this trade. So if I look left, I can see, hey, this candle over here caused a gigantic move towards the upside in the market. Now, it's kind of funny because I'm literally taking the reverse model that is taught to everyone and using what people think they should use for exits as my entry and what people think they should use for entries as my exit. So at this point, you would put your take profit just to the top of this rejection order block, and you guys would see you would have literally zero drawdown and you would hit a 1 to 4.5 risk to reward ratio. That is extremely simple, extremely clean. And just like that, you 4.5x your money in 3 hours. Now I'm going to show you guys an example of how I actually use those tweets that the accounts make in order to secure mass amounts of profits on the charts. This trade was very fundamental based, but had nothing to do with forexfactory.com. I saw these tweets right here, and based on what I've been studying on the Japanese yen, I know that their currency is super deflated right now. And finally, the incoming prime minister has made a promise to help them get back on track. Now, if you guys are unaware of the situation going on in Japan, make sure to watch this video. I'm also going to link it in the description because in there I discuss everything that's going on with the Japanese yen and how you can make money based off of that situation. So when I actually came to the charts, right when those announcements happened, we had this gigantic drop. Now you guys can see, this is an almost 500 pip drop. Now the issue is people try to get in during these drops and end up getting stopped out in little pullbacks, and then the price ends up going in that same direction they wanted, but they didn't have the right stop loss to make sure that they could stay in the trade. So I wanted to stay very patient and let the charts build some sort of structure before I actually hopped in. So as you guys can see right here, I let the charts start to build themselves up. So I drew a trendline liquidity over here, which you guys can see touched once, twice, 3 times, and 4 times. And honestly, I thought I was gonna get into buys, but then I made sure that I drew the other side. So I looked at the bottom. Okay, well, if this was being respected and then it got broken under, why would I be seeing buys in this situation? So I wanted to make sure that I was able to get in at the right point. So I wasn't around during this break of the chart. I was actually in the airport in Saudi Arabia when I caught this trade. So I thought that we were going to get into buys over here. And you guys can see price comes up super aggressively, and I thought that we were going to close above this trend line. And this is why it's super important to wait for candle closures. But then I saw it reject, 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 and then finally give me a very strong close towards the downside. At this point, I entered this trade and took my stop loss right above the highest wick from our rejections, because if we really are going to sell off, it should not be going any higher than that point. And then I went to the left and tried finding some sort of liquidity target in the markets that I could use to make sure that I catch the most risk to reward on this trade. So if you guys look over here, you'll see that we have this significant low in the market over here, resting right above 190 flat. It's at 190.134. And if you guys look to the right, price literally melts straight to this level for a 1 to 4 risk to reward ratio. And I had actually sent this trade to my communities, so that way they could take the same exact entry and exit to replicate the profits that I make on a day-to-day basis. Now, if you guys want to be a part of my signal room where you can replicate those same profits, I literally have just priced it at $1 a day. I'm going to leave the link to that in the description. But you need to understand that most people never find success because they never have a strategy or a pathway that actually leads them there. But I just gave it to you. I just saved you hundreds of thousands of dollars and years of time that it would take to actually figure this out on your own. Do with this information as you will, but I'd recommend to implement this as soon as possible because in simple words, the world is going to shit. With the right dedication and mindset, you can easily learn this and replicate that same success within the next 60 to 90 days. Now, the only thing stopping you is you. You have every single thing that you need to make this work. Now, I'd recommend to like and save this video so you can come back and watch this whenever you want. Or if you want to have this information forever, I'd recommend that you rewatch this whole video right now and take notes on all of it. Because like I said, I don't know how long I'm going to leave this up for. With that being said, guys, I'm rooting for you. I wish you the best, and I will see you in the next video.